Rivian stock getting demolished. What's it down? 18% in a single day? Come on, man. How do you explain that? So I think the production numbers I read were not so good. Um, the company is still losing money. Okay. This is a money loser. Before I do that, the market is red. Weekday. Rivian. Major news. Actually, let me click on that. Let me see what the headlines are. What are they saying? Plunged most. Okay. Anyways, so when Rivian came out, when it IPO'd, I heard a lot of people talking about it. Price to sales was ridiculous. They had no sales. They finally have some sales now. It's still 13 times sales, which would be an okay multiple for a company that's growing at 30% or more. But when it IPO'd, it was super overpriced. When it IPO'd, it was a 150 billion company. It's now 14 billion. So that was a cash grab. Anybody who bought it, thank you very much, said Rivian, because they're funding their operations with that money. But that company is now, is that 90% cheaper? Oh, it's only 89% cheaper. Okay. But it is decimated. They have no earnings. What are they losing now? So when they first came out, they lost 2.5 billion. Don't worry, now they're only losing 1.7 billion. Where is that money coming from? It's coming from shareholders. So they have cash and short-term investments. They have 13 billion left. If they're losing 1.5 billion, you know, how long can they last before they need to raise more money? They need to sell more cars. They need to sell more cars. Their debt is rising. So that means their tangible book is getting reduced. That's their book value. Let's look at tangible book. Right now, this gets interesting because tangible book will tell you, hey, if this company went bankrupt, how much money is in there that I can get. Right now, if they went bankrupt today, it's fairly valued, 94 cents. If it was 50 cents, there would be a profit in bankruptcy to a equity buyer. So right now it's being priced for the tangible book, as in investors are discounting even all the bank accounts, all the net cash they have, they're discounting it, which is interesting. What does that mean? Is it that people don't have faith in the company, or does it mean it's going to bankruptcy? That's now what the question is for Rivian. Let's look at let's look at earnings. People were buying it because the earnings looked rosy. They're supposed to lose in 23, 24, 25, 26, 27, but they'll finally make a profit in 2028. And even that is priced in at this price. Right now, the future 2028 PE is 16. A normal company right now in the S&P is like 20. So even the 2028 price or earnings is priced in. So an investor in Rivian is hoping for a good 2030. It's priced in. Sales have to grow for over a decade to justify this company's losses. Anyways, everybody likes the growth, but who's going to pay for it? That's the question you have to wonder. Let's go over back to summary. No pain, no gain. Yes, buddy. I want to see this. So they have 13 billion in cash, 1.76 in debt, but they keep losing money. If you scroll all the way down, you're going to see cash from operations. They lost $5 billion in the last 12. Um, so they're losing over $4 billion every year just by keeping doing what they're doing. They need to sell more cars. They are desperately in need of revenue and profits. So $4 billion in losses, more than that, $4.5 billion. And if you look at their cash, they have 13 billion. So do they have 2 years of cash? Is that what this is saying? If you look at their market cap, it's 17 billion, and then the enterprise value that factors in the cash. If you take the market cap 17, reduce some of the cash, you get closer. So net cash after debt gives you 8 billion. All right. So if this company survives the next 2 to 3 years, then this will be a bargain. Right now, investors prefer their cash. They want their cash. So this was yesterday's news, yesterday's earnings release, it looks like. Earnings were a little bit better, 11%, but the revenue is getting worse. That's the concern. Is there anything else I want to cover? No. If if this gets cheaper, it would be worth a trade, because if it's trading for tangible book, it's so cheap they're pricing in bankruptcy at below $1 tangible book. That's the concern. Will the company even survive? That's the question. If it gets any cheaper than this, which this situation, who knows? Who knows? Is this a shoulder? Was that a shoulder? Is this going to do some kind of an extension? Like, I have no idea, but investors are spooked. They are spooked, and this cash burn is a concern. I'm in California. I see a lot of these now. They are definitely selling units, but will they sell enough units? That's the question. That is the question. This is a high risk trade. When you have a high risk trade with a lot of uncertainty and economic uncertain times, you have to trade it small. You can't put your big money on this. You need to save your big money, because there's going to be a lot of opportunities in this coming potential recession. If we do go into recession, there's going to be 100 baggers. Go on YouTube and look up 100 bagger stocks. There's going to be 100 bagger opportunities. And if you burn up your capital on a high risk name, if you put all your money into a AMC or a GameStop or a Carnival Cruise, you're going to be a fool, and you're going to be pretty bitter if you miss out on the next 100 bagger stock. I don't know if it's Rivian. It might be, but we've got a long road ahead to find out. So cheers. Hope you found it useful. Bye.